100, but more importantly gold, after being for almost half a year, 2013, below the 1300 mark, we are now seeing it above the 1300 mark for the past 1 week or so. So what's happening in the commodity space? Ashok Mittal, the CEO of Emkay Global Financial Services, is with us, and in a bit we will get a global expert as well. Good morning, Ashok. Good to have you with us. Well, first up, how are you approaching gold now? Is it time to get bullish?
Hi Lata, I think there is a change in the views as far as gold is concerned, because most of the people were quite concerned in terms of no tapering happening in US, and hence no investment demand coming in, and no consumer demand happening in India. But I think what we saw was that there is a good amount of demand from China, as well as Indian demand actually has not really fallen for gold. At the same time, the data which we saw in the last few weeks from US are not suggestive that tapering will continue. So we expect that US may hold on to further tapering as far as QE is concerned. So combination of two things from demand side from India, China, as well as tapering not happening is actually suggestive that we expect gold prices to remain on the higher side. Technically also now, since we are well above $1,300 and being stable there, so we do expect that we should see somewhere around $1,360, $1,380 on the international market. So in India, I think you have a scope of another say 3 to 5% upside happening in gold, because we have not really seen further decline happening on ETF, gold ETF as well, domestically as well as internationally. So I think now we are stabilized and there is a further upside. Although I would like to say that this upside may be momentary for a short period of time, and then again we might see some correction happening in gold. But as of now, the momentum is strong, so it's better to be on the play from the long side.
Okay, so 30,200 is the target that you're watching out for on MCX gold. What about on silver? Any thoughts on whether silver could see a rise as well?
Oh yeah, of course, because silver also technically is above say $21, so we expect it should go to $22.5, which is a resistance level, but we will expect that to happen. So as well as silver also is I think good investment from buying perspective. We don't expect the silver going below say $20 in this run. So you have around say $0.50 as a downside which you are taking as risk, and you are around say $2, $1.5 to $2 upside in silver as well. In MCX, I think we will expect that should not go below say 46,000 rupees on MCX, and upside should be around say 49,000 rupees or so. So you have good risk reward ratio, as well as the momentum is also on the upside. So buying on dips is actually recommended for both gold and silver.
Okay, finally, Ashok, how are you trading crude now? We have seen strength returning to that commodity as well.
Lata, there are 2-3 things in crude oil. Number one is we see some geopolitical issue happening, so that tension is actually brewing up, which is driving the prices higher. Secondly, that cold weather is driving a lot of demand for all entire heating oil packs, which is also driving the crude oil. And third is the technical level again. Our overall year range has been like 80 to 120 in a wider terms, but we do expect this momentum is quite strong. So we will expect 105 or $108 on NYMEX crude oil to be achieved. So upside is quite high, and on downside, I think now we should not go below 100 in this current run. So if you are buying at say 101, 102 level, then you have upside of around $3 to $5 and downside of just around say $2. So buying on dips and with a $1 stop loss, that is in Indian rupees around say 65 rupees stop loss, and upside you have around say 150 to 200 rupees profit expectations. So buying close to say 6350, 6380 range should be a good idea, I think, in NYMEX crude oil of MCX, and then we can expect a target of 6550, 6580 range. Here also the risk reward ratio is quite good. Another thing which people can do on crude oil is they can play on the spread between NYMEX crude oil and Brent crude oil, because spread is still low, and we will expect that this spread can widen further. So you can play this NYMEX and Brent crude oil spread from the long side, I guess.
All right.